Joining me now is Marc Ostwald, Chief Economist and Global Strategist at ADM Investor Services International. What's your take on this address by Warsh? I mean, he spoke before the world's central bankers. Do you think he inspired confidence?
Yes, or rather he restored confidence, I think is probably a better term. The important thing he did was establish a framework within which this new Fed, if one wants to call it that, is going to operate. He made it clear that inflation isn't coming down as they would like it to. What we need, or markets need, is an analysis from the Fed of how they view the current economic performance. That was important. Also important was the fact that he characterized the labor market as basically quite strong, quite dismissive of payrolls, which has been quite often at the forefront of labor market analysis, instead pointing to low jobless claims, low unemployment rate, full employment, as he called it, and also giving some clues about what it is in the inflation data he doesn't like, by highlighting that nearly half of all the inflation sub-indices are running at 3% or above. That basically is something which markets can really get hold of.
Yeah, and he really doesn't like the fact that inflation has missed its target, and he's did it himself for 65 months straight, signalling that he is considering a hike. Do you think that's going to allay some fears that he's too close to President Trump, who famously does not want interest rates increased? In fact, he wants them lowered.
Mr. Trump has said what he says afterwards, of course, that he won't interfere in Fed policy, but he does feel free to comment. Yes, they are running a little bit at loggerheads. I think really more important was with the U.S. Treasury focusing much more of its funding for its huge budget, 6% budget deficit, the rise at the front end of the U.S. Treasury yield curve is going to create some additional debt servicing costs. Meanwhile, at the long end, the fact that the term premium has barely moved today, while the short end has risen by 10 basis points, shows that markets have a lot more confidence in this new Fed than they had in the weeks following the last FOMC meeting, which was, shall we say, a bit of a communications faux pas.
Did you pick up any tension from Kevin Warsh during the speech over Treasury Secretary Scott Bessent's recent intervention in the bond market, the buyback, and I think another is scheduled in September?
I think he's basically tried to avoid any comment on that. Whatever tensions there may be are going to be discussions which are held behind closed doors. And I think that's the way that Mr. Warsh wants to operate. He doesn't want the Fed, the White House or the Treasury to criticize him. And as a quid pro quo, he won't make any comments on what they're doing or the efficacy of it.
All right. Thank you so much for your views, Marc Ostwald, Chief Economist and Global Strategist at ADM Investor Services International.